Did you know that household debt in India has grown more than ever before? In 2020, it was around 35% of our economy. But by 2025, it's close to 43%. This means more and more Indian families are taking loans. And not at all for the good reason. Let's understand what's really happening. In this video, we will talk about why household debt is rising in India, who is borrowing and for what purpose, what RBI and banks are saying about it, and most importantly, what you should do to stay safe financially. Stay with me till the end and get the full picture and protect your money. So, how big is this problem? As per RBI data, Indian households had personal loans worth rupees 120.96 lakh crore by March 2024. That's almost 121 trillion rupees. A big part of this is due to people taking personal loans, credit card debt, home loans, vehicle loans, and small digital loans. In fact, credit card usage alone has gone up from 87,000 crore in 2019 to 2.7 lakh crore in 2024. That's a huge jump. Compared to our country's GDP, household debt has now reached nearly 43% of the economy. This means a larger part of what we earn as a nation is now linked to the money we have borrowed. So, who is borrowing this money? Not just the rich or big cities. Borrowers are from all parts of the country, including small towns and rural areas. A recent report from SBI said that two-thirds of this rise is because more people are taking loans, not because the same people are taking more debt. Now let's look at how people are using this borrowed money. About 25% of loan go for the asset creation, like buying a house or a vehicle. Another 30% goes for education or farming, things that can give returns. But nearly 45% to 50% is spent on consumption. This means EMI for smartphones, shopping, travel, and daily spending. That's where things get risky. If you're taking loans for things that don't grow your money, your debt can pile up quickly. SBI says this debt is still under control. They say most people taking loans have a good credit score. Interest rate may also go down, making EMIs cheaper in the future. But RBI has warned that this fast increase in personal loans and credit cards can become a risk. If people lose jobs or inflation increases, many may not be able to repay these loans. Also, India's household savings are going down. As per reports, net saving dropped to around 18% of GDP, which is the lowest in decades. So people are now saving less and borrowing more. The biggest danger is with credit card loans and small personal loans. These are the unsecured loans, which means there is no asset or property kept as guarantee. Many people, especially the middle class and younger generation, are using credit cards freely and paying only the minimum amount. Over time, interest builds up and it becomes very hard to pay back. Also, loans given by microfinance companies or digital apps to low income families are showing signs of trouble. In 2024, reports said that 16.2% of such loans were delayed or unpaid. That's a big risk for both families and lenders. When too many people have debt, they stop spending money on other things. This can reduce consumption, which is a key driver to our economy. Some experts, including from the Financial Times, says that this can affect India's GDP growth. To manage the situation, bank may start making loans harder to get. This will slow down borrowing, but it might also hurt people who need loans for genuine reasons like education or starting a business. Now let's talk about what you can do as a responsible borrower. Know your debt to income ratio. Keep total EMIs below 30 to 40% of your monthly income. Avoid credit card debt. It has high interest. Try to pay full balance every month. Build savings. Keep at least 6 months' expenses in an emergency fund. Borrow for the right reason. Buy assets, not liabilities. Take loans for homes, education, or businesses, not for the parties or gadget. Plan ahead. Use budgeting apps or talk to a financial advisors if needed. So, to sum up, household debt in India is growing very fast. While it's still under control for now, it can become a big issue if not managed well, both for you and for the country. Stay smart, borrow only when needed, and always have a repayment plan. If you liked this video, please like, share, and subscribe to my channel for more such financial videos. And tell us in the comment section, do you think you are borrowing smartly?